Hello, welcome back. I'm joined with Rob McEwen, the founder and CEO of McEwen Mining, and we're here at Beaver Creek in Colorado. Rob, good to see you.
Peter, thank you.
Let's just, those less familiar, I'm sure most people are, but give us a bit of an idea of who McEwen Mining is and McEwen Copper.
Okay. McEwen Mining was formed in 2012, merger of two companies, Minera Andes that brought in Argentinian properties, and U.S. Gold, which had U.S. and Mexican properties. I was the principal shareholder of both of those, and we put them together. The timing was poor because it was right at the beginning of 2012, and we went into a quick descent in metal prices to the bottom of 2015. But today we have a mine in Timmins, we have a mine in Nevada, they're both gold. In Mexico we have a mine that's doing residual leaching right now, but we have a feasibility study that will extend its life. We have another mine, those we all own 100% of, and in southern Argentina we have a joint venture with Hochschild Mining on a gold and silver mine down there. We also have an interest in two copper projects, and they're held through a subsidiary called McEwen Copper, and one is, the largest is in Argentina, northern Argentina, it's called Los Azules, and you'll hear more about it. And Elder Creek, which is in Nevada, again, in a very prolific mineralized area.
Awesome. Let's touch on McEwen Copper to start. What's the corporate structure there and the sort of capital structure as it stands?
All right. Well, McEwen Copper, first of all, we created it because I felt the value of it was not being reflected in the share price of McEwen Mining. So we put it into a subsidiary, and we financed that privately. And at the end of August, we raised $82 million. So that's where we are. So 68% owned by McEwen Mining, and we're going to take that public in the first half of next year. So there's 26 million shares outstanding, 68% owned by McEwen Mining, 15% owned by myself, 10% by Rio, and 4% by an Australian group, and 3% by individuals.
Okay. And then obviously the main company, McEwen Mining, maybe you can just run through that, because what I wouldn't mind doing is, let's run through McEwen Mining to begin with, and then I really want to just focus on the copper story, because there's been so many good press releases over the last couple of days. Sure.
Yes.
I think people are going to be very interested in hearing that. But with McEwen Mining, how does that look at the moment in terms of corporate structure and sort of cash in the bank and really just sort of shares outstanding, that type of thing?
We have 51 million shares fully diluted. We're listed on the New York and Toronto Stock Exchange. I own 17% of it. My personal investment in it and McEwen Copper totals $220 million. And that would be $40 million in debt that I advanced to the company, and $40 million I put into McEwen Copper as the lead order of that private funding, and $140 million that is the cost of my equity in McEwen Mining. So it was a company that I thought could grow. I still think it could grow quite a bit, but we suffered a lot of challenges in the last 2, 3, 4 years. Fires, floods, write-downs of resources, misguidance. Certainly after having built Goldcorp and having a great success there, it was very disappointing to see the goodwill eroded and the value eroded for all of our shareholders. But we're turning, and right now we've, if I look at the share price from a technical standpoint, we've gone through the 20-day moving average, we've broken through the 50-day moving average, and we're heading towards the 100-day moving average, which to me is a good sign.
Yeah, you mentioned there obviously that it's still an exciting opportunity. And what I wanted to understand is what's the future vision for McEwen Mining? Obviously, you've got the subsidiary McEwen Copper, which is very exciting. We will touch on that. But where's the growth for McEwen Mining, and where does that sit at the moment?
The biggest factor of growth in my mind right now is McEwen Copper. Yeah. And what we want to do is take that public in the first half of next year and do a secondary as well. So we'd put some money in the treasury of McEwen Copper and sell some of our position in McEwen Copper and bolster the treasury of McEwen Mining. We have a preliminary economic assessment for our Timmins complex that projects a better than 9-year life, bringing costs down to sub $1,000 an ounce, and averaging about 80,000 ounces a year from it. Right now it's doing about 45,000 ounces. So doubling of production, lowering the cost. We have a feasibility study on the Mexican operation, and we're just hoping to close on some equipment purchase, but that has another 10 years there. Again, low cost. It'd be about 50,000 ounces of silver equivalent. Then in Argentina, we get 90,000 ounces of gold equivalent. It's a mixture of silver and gold. That they're doing exploration. It's been going since 2007. So I see room there, but in the near term, I think the biggest catalyst for value will be McEwen Copper because it is so large. If I were to look at its resources, and if I added together the indicated and inferred, you'd have 29.5 billion pounds of copper, 5.5 million ounces gold, 191 million ounces silver. So if we just take current metal prices and we were to divide the price of gold by the price of copper, it's about 480 pounds of copper is equal in price to 1 ounce of gold. And then you divide that into the 29.5 billion pounds of copper, you get a gold equivalent of better than 60 million ounces. And if you look at the production that's projected in the PEA of 415 million pounds of copper a year for the first 13 years, you're looking at better than 800,000 ounces of gold equivalent production. And at a production cost of $1.14 a pound, that will work out to under $600 an ounce. So you can see that in terms of life and scale, it dwarfs everything else. And so we're moving that project ahead.
Well, let's have a look at McEwen Copper then, because obviously it's something that McEwen Mining shareholders, existing shareholders, are leveraged to.
Yes, they are. But I'd say that our operations of McEwen Mining, the precious metal ones, are turning around. I think the market, we've had this very ugly decline in price, big disappointment for all shareholders, but it appears to be bottoming out. The operations are stabilized, the costs are coming down. And I think a lot of people just went, oh, look at it, look at that direction. It's not one I want to be on.
No, in this market, that's happened a lot.
Yes,
absolutely.
And so they said, well, let's just leave it. And I think this is a very opportune time to be looking at it because we seem to have been bottoming, and there's a lot of good news coming out. So.
Okay, well, just going back to McEwen Mining then, as we've just gone back to it. I mean, you're talking about ramp up and I guess getting costs lower and potential expansion potential at some of these mines. How much is in the kitty at the moment, and how much are you looking? Basically, are you able to fund these expansion opportunities? What's the direction looking like, and when might these be able to come into full-scale production based on the new PEA and PFS that you were talking about?
Our consolidated cash position, that being consolidating McEwen Copper and McEwen Mining's cash, is 48 million at the end of the half. We had 65 million in debt. There's no immediate need to retire that. Of the 65 million, I'm 40 million. So I'm not pressing anything for immediate repayment. And the other 25 matures in August of 2024. So that's okay. Our production's been going up. As I said, our costs are going down. The operations are generating a profit. Yep. But we're a big believer in exploration. And so over the next couple of years, you're going to see an accounting loss recorded as we have to consolidate the work that's going on advancing McEwen Copper. But it's important that the cash flow is positive.
This money, that sort of the cash that you're putting in exploration, is quite significant. Is that mainly going into the copper assets, or is that also going on the expansion of the existing gold mine?
Well, the copper's taking most of the money, yep. But in the first half of this year we spent 7 on the gold properties, and we're going to spend another 8 on the second half of this year. And the copper we spent 24, and we'll probably be spending at least 20 there by the end of the year, because it's in Argentina, and right now you're in the middle of its winter.
Yeah, sure. Sure. I'm just, with the future outlook of McEwen Mining, obviously you're doing this expansion on a few of the different properties. Is the idea for you to expand these yourselves, or are you open to the idea of sort of now moving more towards a copper focus and finding new partners to work with you on the gold assets? Or
no, I'm a big believer in gold, and that's where I grew up and I guess built most of my experience. Copper's a new adventure, but I look at the projections of automobile manufacturers and all of them going to electric vehicles, and the copper they need, the urbanization, rapid urbanization of Asia, and the renewable technologies for renewable energy. They're all requiring copper, and you can see a big deficit ahead. So we want to be part of that energy transition, but I'm also a huge believer in gold, and I look at the debasement of currency that's happened with the huge, unprecedented monetary stimulation that's gone on, and you look at the debt, and well, you have to repay debt. And history has shown us every time people print, governments print large amounts of money, you can't buy as much with your dollar, your pound, your euro. And it's interesting, I was going for a walk today with one of the gentlemen presenting here today, and he said, you know, when the iPhone came out, gold was around $700 an ounce. Today, and the iPhone cost close to $7. Today, a new iPhone will cost you $1,300 to $1,500. It has more features on it, but 1 ounce of gold will still buy an iPhone.
Yeah, very true.
Whereas you're buying a tomato, it's going to cost you more. You're going to buy a car, go to the dry cleaners, it's going to cost you more. So gold is serving its function as preserving value, and that's why I'm very long gold bullion and gold shares, and I invest in that space a lot.
Good. What you're basically creating is a diversification as well for your existing shareholders, I guess, through this, which is great through the gold aspect and then through the copper. But moving on to more of the copper, because I wanted to touch on the press releases recently. You've obviously just finished the third tranche of a private placement.
Yes.
Maybe you could just tell us a little bit about that and how much you've raised, who the partners were, and what the use of proceeds might be with it.
Sure. We decided to create McEwen Copper because it seemed to me that the market had a preference for a pure precious metal company and a copper company, but not a precious metal company the size of ours with a cash-hungry copper development. So we put it out, and last summer we said we're going to do a financing, $60 to $80 million. And I said, well, I'll put up $40 million and put it into the bank account, and thought, perhaps naively, it's going to be easy to raise the other $40 million. And well, it's taken us a while, and earlier this year we got another 15 in. 10 of that came from an Australian group that currently own 4%. And then we were looking at Rio Tinto's technology for heap leach processing of copper, and they looked at it and said, well, you got an interesting copper deposit. We'd like to put some money in there, and so they put in $25 million, and that was the third tranche, and we had $82 million raised. So that'll take us through the updated PEA and towards the feasibility study. We'll do the IPO in the first half, assuming the market is receptive. And if it isn't, we still have enough cash to keep going through that period and waiting for the market to be receptive. And do a secondary of McEwen Mining's position to put the money over there to advance our growth projects there.
Of course. And with the IPO, would the idea then to be to raise some additional funds with the IPO, or are you happy with the 80?
No, we'd raise additional funds to complete the feasibility study.
Amazing. Okay. And I just want to get a bit of an idea on the scale of this. You did touch on it earlier, but what exactly, you mentioned it's a world-class deposit in Argentina with the copper asset. Well,
how is it?
Give us a bit of an idea of sort of the grade, what the actual ore body looks like, and how much could be potentially produced out of this thing.
Okay. It's, according to Mining Intelligence, a firm that looks at projects all around the world, it is ranked as the 9th largest undeveloped copper deposit in the world. And furthermore, it's the 4th largest undeveloped copper deposit in the world not owned by a major. So that's scale. It has about 900 million pounds of indicated ore at 0.48% copper, and it has another 900,000 million, tons of copper in the indicated category. It has a 36-year life. It's 29.5 million pounds, or billion pounds of copper. As I said, 5.5 million ounces of gold and 191 million ounces of silver. So it's large.
Pretty big.
It's large.
Yeah. And obviously, you're talking about this leaching technology that Rio are potentially going to introduce. When might we be able to see some metallurgy and some recovery rates and things like that associated with the new technology?
We've sent samples of our material off to them, and we'll start seeing that later this year, but they're looking at the final results somewhere in March of next year. But we'll have some initial indications that we'll be able to put in the updated PEA, and they'll be available likely in December.
Okay, that's a good. Looking at the other asset that they've just done an earn into, which is the one, is that the one in Canada? Right?
No, it's in
the US,
Nevada.
In Nevada, sorry. Can you just tell us a little bit about that as well? Because it takes them up to about, was it 60%?
Yes.
Yes.
It's a large property package, about 9,600 acres, or I guess hectares. It'd be over 4,000 hectares. Mm-hmm. It's in the north end of the Battle Mountain Cortez Trend. It's near the Fenix mine, which is a copper gold producer. It's not too far from Lone Tree. It's right next door to Marigold. Oh, yeah. So it's in a well mineralized district. The physicals, we did a magnetic survey, and there's a classic porphyry style shaped donut. There has been some drilling. There's copper and molybdenum in there, and there's grades that run up to 1% copper.
Awesome. Okay. So. And how does the agreement work? So what's their obligation to spend? And obviously it takes them up to 60%. Is that the cap, 60%, or is there? I've seen with other deals that Rio have done, say in places like Zambia, where it actually converts after a while into a royalty if they continue. Is that anything else like that tied in here?
It's a 7-year project to earn 60%. They could earn it faster if they spent more. Yep. But in the first 2 years, they're spending $2 million, and thereafter, in the remaining 5 years, it'd be a declining balance of 10% of the outstanding to earn the 60%. And then I guess there's participation. I mean, you could get diluted to a smaller amount. We do have royalty interests, 1.25% on both Elder Creek, which is the Nevada property we're speaking about, and on Los Azules. Just anticipating that one day these could become big projects and might require a lot of money.
Well, this was actually going to be my next question. Was obviously you've already got Rio involved in the asset. Like I said, they're going to be very big projects, massive capex usually with these type of projects. I guess that surely must be in the back of your mind that the strategy will be to eventually potentially JV with Rio or someone else in the region.
Well, right now we're looking and saying we want to come up with a plan something that our feasibility says we could fund. But there's also a growth profile. We've engaged Whittle Consulting of Australia and saying, guys, this is a much bigger project than what the PEA suggests. And if you went in there large, you put a mill in and that, but the capital costs would just, people look at it and say, McEwen Mining doing that? Forget it. So we thought, we want to improve our negotiating position too. I mean, if you just have, here's the big project, and they're going to look, You're not going to be able to do that. So our fallback is, well, we're going to develop a stream that we get the cash flow coming quickly, we can finance it, and phase developments.
No, awesome. And I guess just to finish things off, I mean, you've had a lot of exciting news come out over the last couple of weeks. But looking a bit more forward over, say, and you have touched on some of this already, but just as a recap, what over the next 6 to 12 months should investors really be looking out for, and what's exciting?
For McEwen Mining, it would be exploration news coming out of our Timmins operation, which we call the Fox Complex. Gold Bar, we're going to be starting production in this satellite deposit in the 4th quarter. Mexico, we might be advancing. So that's McEwen Mining. Looking at McEwen Copper, we're going back into the property and we'll start drilling in late October. We have a large program there. There's a lot of other studies that will support a feasibility study. We're going to be going around, and I think the closing of the 3rd tranche, so completing the 82 million, to me was a very powerful catalyst. Because a lot of people looked at us and said, well, they didn't finish that financing. I guess they couldn't because no one really thinks enough of that project.
Yeah, whereas now you have a major backing it.
We have the 2nd largest mining company in the world coming in and not making a huge investment for them, but 25 million is a statement. And so we're going to spend a fair amount of time telling the world that we think we have a terrific deposit. And I think a lot of people will agree. And even at this conference going around, people went, oh, I didn't know you had that. That's big. And they compare it to some of the hotter names that are out there that are valued significantly higher than we are. And they're going, I think there's going to be some adjustment in our value.
Awesome.
In a positive way.
Definitely. Robert, thank you very much.
Peter, pleasure. Thank you.